Hi, I'm David Harrell with Morningstar Investment Management. In this monthly video series, we take a look at the dividend prospects of 3 stocks that are popular with income investors. First up this month is Dominion Energy, a predominantly regulated utility based in Richmond, Virginia. Dominion currently yields an attractive 4.8%, but its 5-year dividend growth rate remains negative, following a 33% dividend reduction in late 2020. In February, the utility announced that its 2023 dividend rate would remain unchanged from 2022 at $2.67 per share. The dividend received a fair amount of discussion during the company's February 8th earnings call, with management committing to the current dividend and return to a 65% payout ratio, saying it expected to achieve this goal without making a dividend cut. Given Morningstar analysts' expectations for 2023 and 2024 earnings, I think it's likely that investors will have to wait until 2025 for Dominion's next dividend increase. Next is JPMorgan Chase, one of the big 4 U.S. banks, which has been in the headlines for its recent acquisition of First Republic. Morningstar analysts believe the acquisition is a good deal for JPMorgan and could add an additional $500 million of annual net income. But while that's a large number, it only represents about a 1% increase in earnings for the bank. The stock currently yields close to 3%, with 13.5% annualized dividend growth over the past 5 years. However, the dividend hasn't been increased since the final payout of 2021. Morningstar analysts note that the capital allocation plan for JPMorgan Chase has generally been roughly 30 to 35% of earnings to be devoted to dividends, with the remaining 65% dedicated first to investing in the business and any leftovers used for repurchases. Following a year of minimal repurchases in 2022, as the bank built up its capital levels, they expect share repurchases to resume in 2023, along with the potential for a dividend hike. With the projected payout ratio of 29% for 2023, JPMorgan should have room for a modest dividend increase, which would likely be announced later in the second quarter, following the results of the annual stress test that the largest banks are subject to. Finally, in addition to paying a monthly dividend, Realty Income, a real estate investment trust that markets itself as the monthly dividend company, generally increases its dividend several times a year. It made 4 increases in 2022 and 2021, 5 increases in 2020, and there have been 2 increases so far in 2023. However, these raises are quite small, resulting in annualized dividend growth of 3.2% over the past 5 years. The REIT currently yields close to 5%. While the attractiveness of any dividend-paying stock increases as the share price decreases, thereby boosting the investor's yield on cost, given that Realty Income's dividend growth rate is likely to remain low, the purchase price and discount become a large consideration, as is the case with the other 2 stocks featured this month. I'm David Harrell with Morningstar Investment Management. Thanks for watching, and we'll see you next month.